Good morning. Inflation versus real estate leverage and why smart borrowers use mortgage debt strategically. And inflation is often framed as the enemy of financial stability, and rising prices reduce purchasing power and make everyday expenses more expensive. And however, in real estate and mortgage finance, inflation can actually work in favor of borrowers who use their leverage wisely. In understanding how inflation interacts with mortgage debt, is one of the most important financial concepts for homebuyers, investors, and business owners. And this is where strategic financing becomes real powerful. So let's talk about how inflation erodes the value of your mortgage debt. So when you take out a mortgage, you're locking in a fixed dollar amount of debt at that single day. So for instance, you take out a $500,000 mortgage and the loan is fixed for 30 years. Well, over time, inflation reduces the real purchasing power of that money. So it's worth less today to the person who's holding the note, is the point, and not to you. It's cheaper to you. And that means the dollars used to repay the loan in the future are worth less than the dollars that you borrowed at day one. So, in other words, inflation quietly reduces the real cost of your mortgage. Now, this dynamic is one of the reasons real estate has historically been considered a powerful inflation hedge. And real estate prices tend to rise with inflation. While inflation erodes the value of debt, it often pushes asset values higher, though. So, over long periods, real estate prices tend to rise alongside, say, construction costs, labor costs, as well as land values, and your overall total replacement cost if you have to rebuild is new. And when inflation increases the cost of building new properties, existing properties often become more valuable in trade. So that dynamic benefits property owners because their asset values increase while their debt remains fixed. So let's talk about how leverage multiplies returns. And real estate leverage allows borrowers to control the large asset with relatively little capital. So example, say you're buying a $500,000 property and you're putting down 20%, so $100,000, and your mortgage is $400,000. If that property value rises 20%, then the home is now worth $600,000. And that's a $100,000 increase, which is a 100% return on your investment of the original $100,000 down. That is the power of leverage right there, my friend. And inflation can accelerate this effect over time. Next point is that rental income also adjusts with inflation. So for investment property owners, inflation can also increase your rental income. And as housing costs rise, rents typically adjust upwards. Whenever your lease renews, you have to set a new rate. And property income thereby is also going to increase. But your mortgage payments, they remain fixed. So this can improve cash flow and debt coverage over time, particularly with fixed rate financing. So let's talk about why fixed rate mortgages are powerful during inflationary times. So borrowers who lock in long-term fixed mortgage rates gain a major advantage during inflationary periods where it runs rampant. And that means your monthly payment's going to remain constant, whereas property values are also rising at the same time because of inflation. So is the rental income that you're going to collect because of inflation. And inflation also reduces the cost of the debt that you're actually paying on nominal terms. And that's why many experienced investors focus on long-term fixed financing structures when available. So let's talk about the strategic advantage of mortgage brokers. And every borrower's financial situation is going to be completely different. And some borrowers will benefit from a fixed rate mortgage, whereas others might benefit more from an adjustable rate loan. And investors love DSCR programs that are easy to qualify. And there's commercial real estate financing structures available. The key is structuring the loan correctly and not simply chasing the lowest interest rate. And at Medallion Funds, we help borrowers evaluate their full capital structure of every deal. And that ensures their financing strategy aligns with their long-term investment goals. So the final thought is that inflation can feel like a challenge in the broader economy. But for real estate owners who understand leverage and mortgage finance, inflation can quietly become a powerful financial ally. And the key here is using the right financing structure, the right leverage, and the right long-term strategy. And smart borrowers don't just react to inflation. What they do is they structure their financing to benefit from inflation. And that, my friends, is it for the day. Please visit billrapponline.com to figure out how to get a hold of me. I'd love to talk to you more about your situation and how we can help you. Have a good day.